Storybox Audio. Storybox Audio. Storybox Audio.
Hey. It's Friday. How y'all doing? Hey, everybody. Hey, y'all, it's Friday. Hey, everybody. All right, y'all. Welcome to the clubhouse. For those of you guys who don't know, we are a inspiration, motivation, and education station. Come on in, sit down, have a seat on the couch. Hey, ladies, how y'all doing today?
Doing great.
Doing good.
Good. Can y'all hear me okay? I don't have my microphone, so I'm yelling, and I'm usually yelling in my mic. So y'all hear me okay?
Yes.
Good. All right, y'all.
Yes.
It's Mortgage Monday. It's Mortgage Monday. Oh, goodness. We're having a mortgage minute today, you guys. It's Fabulous Friday. Welcome to the Home Buyers Clubhouse. We have our lenders in the house today, you guys. We're talking all lending. You guys, I'm getting some feedback from somebody, so if y'all can mute, if y'all don't mind. But yeah, we're talking about lending today. All lending. Bring in your mortgage questions, if you can. Erica Bax and Samantha, they are our lenders on our panel, so we're going to question you guys today. Somebody got some feedback. Somebody, y'all mute. Can y'all mute? Somebody mute. Mute. All right, cool. But y'all gonna have to come back in anyway. All right, so we're talking to our lenders today, you guys. We have a few questions for them. Drop your questions in the box below. We're talking about lending, funding. All right, Erica and Samantha, how y'all doing?
I'm doing good. I'm riding, but I'm doing great.
Good. Are y'all getting any snow out there? Y'all getting snow? Who's getting snow? Anybody getting snow? Takia, you getting snow?
No.
What? Such disappointment.
It was. I was very disappointed. It was a little that stuff came down yesterday, but nothing that stuck because we had rain prior. So
same here. I was just hoping y'all were getting something. I'm disappointed in us. I was up all night waiting on the snow like a big old kid, and we didn't even get any. So I'm not happy about that. All right, you guys, drop your questions for the lenders in the box below. All right, we're gonna start with the questions. So are y'all ready? Introduce yourself, Erica. Let them know who you work with and all of that good stuff.
Sure. My name is Erica Batts, and I am with New American Funding.
Samantha.
I am Samantha Harding,
and
you are a mortgage lender at this time.
You're not with nobody.
We're in the process of changing those things. That's what really
all right, so we're going to get started, you guys. A lot of people don't realize, when it comes to buying a home, that you don't need to make a lot of money to buy a home, but the more money you make, the better. So we're going to start with the small questions, you guys. So the first step you need to do whenever you get a house is you need to get pre-approved. Could you guys tell them the difference between pre-approval and pre-approved and pre-qualified?
A lot of times with a pre-approval, that means that we have checked your information, we verified, we've looked at your paycheck stubs, we have looked at your job history, we've taken a look at those things. Whereas a pre-qualification is really kind of like, when you get a credit card offer in the mail and it says you may be qualified for a $50,000 credit card. Well, they haven't checked anything. They don't know whether you're actually qualified, but they're saying based on like a preliminary credit profile or your name being on some sort of list, you should be able to get the $50,000 for your credit card. But when you're actually pre-approved, that means that we've done our background checks, and we know that we are willing to say that yes, we will lend you this money.
Awesome. And I like that. You said, hey, you may have been pre-approved. You may have been
Right.
And you guys, it's very important to make sure, pre-qualified, may be pre-approved or whatever. Because it's very important, because if you don't have them, if you don't give them any pay stubs or any of that stuff, if they're not doing all of that, you could be disappointed in the end. So make sure they're doing the proper steps. Nicole,
Right.
do you want to ask them a question?
One of the questions I would ask the lenders, what's the one thing that you would advise clients to do to make their process easier when they want to get pre-qualified or pre-approved for a house?
The main thing on that is they need to be prepared as far as your paperwork. So the things that we're looking for is, I need to know where you've lived for the last 2 years, where you've worked for the last 2 years, what kind of assets that you may have, and that's like your checking account, savings account, any type of retirement account, things like that. Like, are you married? How many dependents that you have? That type of information is just what you would need to do in order to prepare.
Samantha, you want to?
I would say that too, and kind of be aware of, your bank account, what's in there, and how you're tracking your transactions. Because I've had a couple people who get a lot of cash transactions and a lot of deposits, and we can't really count those monies. So it just kind of makes it a little more complicated when you do a lot of transactions and got a lot of cash coming in and a lot of cash apps. We can't utilize most of that money.
Yes.
Awesome. Takia, you want to ask them a question?
Yes, I want to ask something is there something specific for, let's say, our self-employed individuals, maybe, that they need to, a certain way that they need to look at things in order to get pre-approved? Because sometimes they think that they can't because they're self-employed.
Well, I would start with, we don't need as much deductions. Get a good accountant and not as much deductions, because I find that a lot of people are getting deductions, and then that's lowering how much income we can actually qualify for. But I don't have a lot of self-employed people, so that may be a really good question for Erica.
Okay. Yes. So as far as your self-employed individuals, what we're looking for is your last 2 years of your tax returns. We're also looking for your current year profit and loss statement. So keeping good records is really important when you do that. And if you're thinking about buying a house and you are self-employed, talk to your tax professional and let them know that that's what you want to do. And then they can guide you as far as what kind of deductions that you want to take, or how to best plan for purchasing. A lot of people like to think, okay, well, I make $100,000, but you only claim 20 on your taxes. So you can't eat out of both plates. So you can't say, I want you to give me credit for $100,000, but I only want to pay taxes on $20,000.
Awesome. So how much income do one person have to make, or what kind of income can they use whenever they apply for a mortgage? Can they use disability? What kind of income can they use?
Just about all sources of income. So you can use Social Security, you can use disability, you can use child support. If your child if you're going to be continuing that child support for at least 3 years, and it is generally a court ordered, and you are receiving it on a regular basis. So if it's a sporadic child support, you can't really count that. But if it's court ordered and it is something that you are receiving on a regular basis, then that is income that can be used. And then, of course, your W-2 income, all that can be used.
Court ordered, you guys. Court ordered. So let's say if an attorney drafted their child support, could they use that?
Yes. So the court will then certify, even if you got it in a divorce, something like that, and in your divorce decree it says that you are supposed to be receiving child support, then that counts as well.
Okay. So some things that could hurt your income whenever buying alimony. Does alimony hurt you? Alimony, and if you're paying child support, does that affect how much money you're going to getting loaned?
Yes, it is considered a debt. Go ahead, Erica. Erica look like
that is absolutely correct. That is still a debt that you have to pay, even though it's not And on some credit reports, it's listed as well. Some states list it, some states do not, but it is a debt that you are responsible for.
Okay. And what's like one of the biggest things you've seen hurt somebody that's actually stopped them from getting pre-approved or closing on their home? Maybe like at closing, they were supposed to close today and they couldn't close today.
Not having enough cash to close, and then also debt to income ratio. So I've had a situation where someone went out and purchased new furniture for their new home, and that affected their debt to income ratio, and that meant that they no longer qualified. So we were a day before closing, and they weren't able to get the house for that reason.
Look, y'all, we talk about this all the time here. We say this all the time. Do not go buy that furniture for that new house, or you're not going to have a new house. Buy it after you get those keys. Don't go buy a car, or you're going to be living in that car. Buy it after you get those keys. So say it again for the people who want to decorate their house. It's okay to just have house full of furniture. Sleep on the floor if you have to. It's okay. Get an air mattress, $10. Go on, I'm listening.
That's you're exactly right. So it is. You want to get the house before you start incurring additional debts. There's some people that they then try to establish new credit, and then there are also some people who they took cash that they had because they didn't think they needed it for closing, but then they did not have the reserves needed, so it still was an issue. So talk to we should all be having a conversation the entire time. So your lender, yourself, and your real estate agent, we're gonna be your best friends throughout this process.
But they really need to understand that you really need to. We are your best friend, and y'all really need to listen to us. And one thing I say right now is do everything you're doing right now to get pre-approved. Keep doing it. Keep saving that money. Do better. Don't do worse. Don't go spend your money. Do better. Ladies, y'all got anything else? Huh?
I would say when you're ready, when you think you're ready to buy a house, then that's when let's have a conversation so that we can get a plan together. So you know that you're on the right track. Because a lot of people, they say, well, I got to pay off all the things on my credit, and that may not be what you need to do. So you need to talk to a professional so we can help guide you and get you to the finish line.
All right, Nicole, you got any questions you want to ask?
What is the minimum credit score that you guys have to be able to get into a home?
Well,
let's start with that.
You can qualify for an FHA loan down to 500, but you typically need 10% down if you do go down to the 500. And typically that's a manual underwrite where we need all your documentation up front, and a lot of just like no late payments within the last 12 months typically associated with that. And if you want to pay 3.5% down, you'd have to have at least a 580.
Okay, so outside of FHA?
Unless you're a VA. If you're a VA, like most people, some lenders doesn't have a minimum credit score, but most of them do stop at like 550 or 600. Mortgage Solutions doesn't have a minimum credit score at this time.
And what about conventional?
I didn't hear the last part.
I was saying, what about for conventional?
620 for conventional. For Mortgage Solutions, that is. Erica Batts, you can take it over.
I will say, keep in mind that different lenders have different criteria. So just like Samantha said, with hers, it's 500. She goes down to 500. Well, so for New American Funding, we go down to 580. And then that's going to be for all your government products. That's your USDA, your VA, as well as your FHA. And your conventional loans is 620.
All right, so let's go. FHA, 580. Is that what you said? 580 FHA loan, and you have to pay 3.5% down, you guys. For USDA, what's the credit score for that? Because it's like higher, right? 640?
No, we are also 580 for that as well right now.
Say that one more time then. Tell them again, Chad. USDA loan.
Yes, USDA, we are 580 for your minimum credit score, and that is a 0% down product. But you do have to, that is generally area specific.
Awesome. All right, VA is no credit score for some lenders.
For some lenders, yes.
Mhm. So
All right.
ours is 580, and I don't know what Samantha's is.
Okay.
Same thing for 580, but I haven't known anybody that actually worked out for us, so that's why I don't say much about that. So
Okay. Well, I have had some people that's worked out for us, so
yeah.
that is it is something that we do.
All right. Takia, do you have any questions?
Yeah, I was going to ask, and so with people, let's say that have bankruptcy on their credit, is there a certain time frame that they need to wait, or are they able to go and start applying for a loan?
So bankruptcies, you can still get a house with bankruptcies, but depending on what chapter that you filed is going to depend on how long that you have to wait in order to be able to do that. There's some that you have to wait 2 years. There's some that's 4 years. And generally, once you file bankruptcy, they don't like to see late payments once you filed.
Okay. All right, Samantha, you want to piggyback or you good?
No, the same rules apply across the board for that. But I've seen some that were able to do 13 months out. I don't remember exactly what their situation was, but I know there's some of them that let you do 13 months out, depending on the chapter. And I don't have the chapter quite written up right now, but there may be possibilities for you all if you're 1 year out at least.
Okay, so what are some things you guys look at? I know some banks they are definitely checking your bank statements throughout the entire process. How does that work for you guys? How do you guys do that, and why it's important for you guys to have those things?
Well, I typically do a lot of manual underwrites because if you're between a 500 and 600, the computer is just not automatically underwriting for you. So we do need paycheck stubs. We do check to see if you have large deposits. We are checking to see, how you spend your money for the most part. We want to make sure there's reserves there. For a lot of down payment programs, if people do want down payment assistance, they have to have a minimum amount of reserve for some of the programs. So we need to make sure you keep that in your bank account. And paycheck stubs, make sure they match up with what you say, as a document that we need, because some people say, oh, I get paid and I get paid commission. I get all these things, but we can't just go off what you made last week on commissions. We kind of average that out. So we have to have a conversation about that as far as documents.
Yeah.
Awesome. So do you guys offer any other loan types, and how long does it normally take to close for you guys? Is it just 45 days or 30 days, 10 days? I've seen some. Like, how does that work? Especially for the people that say they can close in 10 days. I'm just curious. Even if y'all don't offer it, do you guys have anything to say about that?
We do have some that we've closed in 14 days. So that's usually we're getting a lot of your, and that's usually 14 business days, by the way. So that's usually we are getting all of your documentation up front. So the only thing we are waiting for is your contract. So we are ready to go.
Boom. And what's some advice you would give during that time?
As far as,
so you can close on time.
So you can close on time. You need to be cooperative as far as getting us your documentation. When we ask for things, you do need to give us those things in a timely fashion.
What about that blank page on that bank statement? Is it
We
important?
need all pages of your bank statement.
I've also found, like, if you already know what kind of lawyer you want to use, if you know what kind of homeowners insurance, I find that helpful instead of having to search after the fact and then be like, oh, I don't know, and then that kind of slows down the process a little bit because you're searching for those people. So if you have an idea of the people you want to be a part of the transaction, it kind of helps out a little bit instead of searching after you find the house. Like, oh, I might want Geico, and that is helpful to me.
So what are some tips you would give to like a low income buyer?
Talk to your lender first.
Besides that.
I would say try to have low debts. So your income doesn't necessarily determine, is not the only thing that determines how much house you qualify for. Like I've had some people making $20 an hour that still qualifies for a house because they didn't really have a whole lot of debt. But then I've had some people making $60 an hour who didn't qualify because they had too much debt.
Say that one more time and explain like why they didn't qualify, if you don't mind.
Because they had too much debt. So when we look at it, we look at how much of your available income do you have that is available to be applied towards your debt. And so we only take a certain percentage of that to determine that this house has to be affordable.
And what people don't understand, I know for me, once my credit score started improving and your income starts improving, they're going to want to throw all these cards at you. They want to throw all these credit cards at you. They want to throw everything at you. Just because they are throwing it at you, you don't have to take it, especially if your goal is to buy a house. It's so disappointing. Sometimes, people, I really want to buy a house and blah, blah, blah. They work on their credit. Next thing I know, they're getting a new car. Like, you just like, now you can only get $100,000 house.
Well, you have to realize that there are rules in place. There was a housing crash. I know a lot of people were aware of this whole housing crash in 2008. And then they put certain rules in place so that does not happen again. But they don't have those same rules for cars or credit cards, those kind of things.
The housing market plays a big role in our economy, and a lot of people don't understand that. So yes, they need that blank page on your bank statement. They need that. They need everything. They have to make sure. Underwriting, they have to do everything. They have to check your size, pull your blood, and take just a spit swab and all that. But they need everything else. Besides that, they may need a fingerprint in the future.
Correct.
Who knows? I don't know. Say what? And it's not our fault, you guys, because believe me, we don't get to put our finger in everything that goes on behind the scenes when it comes to lenders, because they have to be confidential. I'm sorry, go on. Anybody want to add anything? Anybody want to ask any more questions?
I do have a question. Do either one of you guys have a program for clients that don't have credit scores?
FHA does have a no credit score program. So you do have to provide things like your rental history, things like that. But yes, it is possible.
That's a good question.
Is the rental history looked at with any of the other programs?
They may ask for it. It just depends on what kind of loan type that you're looking for. So, but sometimes they will ask for a 12 or 24-month rental history.
I know, I like that, right?
Mm-hmm.
Samantha, you need to put that in the audience.
I can do that.
She ain't even paying attention. Go to Kim.
So my question is,
I was trying to type.
Oh, okay.
So my question is, we know that student loans are crazy, and we have a lot of buyers with that. How is that looked upon when they are applying for a loan?
You want to take that one, Samantha?
I was typing in the last comment, you guys.
Sorry.
But student loans. Oh yeah, for us, you count 0.5% of the total loan as the monthly payment that you would have to pay. If you're on like an IBR, I just use acronyms like everybody know these acronyms. But if you're on income-based repayment plan, we typically can't count that. So that little $7 payment, unless it's conventional, we can't really use that. So we just count 0.5% of the total amount as your monthly payment that you're supposed to be contributing, even if that's not really what you are contributing. That's what we have to count. I mean, Erica may know stuff.
No, and that is true, but that's one of the reasons why you want to, if you have student loans, I would definitely say try to get that credit over that 620 so that we can use the conventional financing, because conventional financing does take into account income-based repayment plans. So you can have $250,000 worth of student loans, but be on an income-based repayment plan. And if you're at, let's say your credit score is 650, well, now we can look at a conventional loan option without having to count those payments and those student loan payments. Because otherwise, let's say on $250,000, I would have to count a payment of $12.50.
Wow.
No, you're not paying $12.50, and that's a lot of house that you now
Mhm.
can't.
Now y'all see the benefits of having a good credit score or
Yes.
fair credit score. Those are the benefits. So work on increasing your score. Takia, did you have any more? Did y'all have
No,
any more
I'm
questions?
good with that. I think that's awesome. So if anybody with your student loans, make sure you get that credit up.
Definitely. That's awesome. Okay, so I do have some questions, and I'm not sure. I was kind of looking at different loan types earlier today. Have you guys ever heard of something called a Good Neighbor Next Door loan?
Mhm.
Have y'all ever? Okay, can y'all tell them about that?
All right. Well,
I will say that I do know about it, but I think Samantha has that one.
yes, Good Neighbor Next Door is usually utilized for teachers, firefighters, public servants are usually able to take advantage of the Good Neighbor Next Door. It is a part of an FHA program. They do have additional perks for those who are in those areas, is typically what happens. And I believe the way it works, I haven't done one yet, but I know someone who has, and they give you kind of a discount on the home as well. That's what I understand it to be and work as. Again,
Yeah, they
I'm
have
not
a
speaking from experience. So
have an entire website as well. I was kind of on there playing around today. So yeah, y'all look that up. Good Neighbor Next Door loan, and it's for who again?
public servants for the most part, teachers, firefighters, police officers.
Yep. All right, cool. So what about HUD loan? Y'all want to talk about a HUD loan? No.
So a HUD loan is basically just that's who services those particular loans. So they do have some They have some programs where if you buy a HUD home, then they give you incentives in order to be able to do that. And so HUD homes would be ones like that they may have foreclosed on from a previous buyer, things like that, and they want to get rid of those houses.
All right. And one question that we get a lot, a lot of people, they always ask us about grants when it comes to buying a home. Again, we kind of talk about people with low income. Do you guys have any advice as far as grants or where to find grants, all of that?
They do have some down payment assistance programs, but generally with those programs, you do have to have a higher credit score. So you're looking at a 680 for that. You're also looking at you want to make sure that you get all the rules that go with that as well. So with some of those programs, you don't have to pay that money back if you have if you stay in that house for a certain length of time. But if you move out before then or turn it into a rental property or any of those things, they're going to look for their money back.
Mm-hmm. Like 10 years, I believe.
Is some of them are 10, some of them are 15 years, so it just depends.
Wow.
Yeah. And some in our area are 5.
Oh, 5 is doable. Okay.
So where you can refinance?
Yeah, talk about because we are the Home Buyers Clubhouse, but what about the people that may want to refinance their home or need some extra income or maybe on the verge of losing their home? Do you guys have any programs, or what do you guys do, refinance, or what you want to tell them about refinancing?
So we do refinancing, and we can also sometimes we can do a cash out refinance as well, depending on how much equity that you have in your home. That allows us to be able to, to be able to try to get you out of that situation. There's also some foreclosure prevention things that are happening out there. So that if you have a house and you're thinking about doing things, then let's talk and at least have a conversation.
So you mean to tell me that lenders are actually offering foreclosure prevention?
Yes, ma'am. Some of them are.
Lenders don't offer that. That's going to be things like the North Carolina Housing Finance Agency. They have their programs out there. So, but we definitely want to help people. And, we can always get you connected to a realtor who can help you sell that house and get you from underneath that foreclosure.
Don't let your house go back. And Nicole, I know you do short sales also, right?
I do. I kind of fell into short sales back in 2011, just trying to help a friend. And so now it's become something that I do on a regular basis. And basically, that's where you're selling your house for less than what you owe the bank. So it can be a lengthy process, but a lot of the banks have gotten a lot better than they used to be when I first started doing them. So it doesn't take us as long, but you do need to have a little patience. And before you allow your house to go into foreclosure, definitely reach out to somebody, because the short sale is a lot better than taking that hit for that foreclosure. And I have clients that I helped out during the crash 2011, 2012, 2013 that are now actually buying their homes again. So it's not a done deal where you won't be able to purchase again, but it's definitely better than going into foreclosure.
Exactly. Takia, do you want to, what do y'all have in your area up that way? Y'all have the same programs?
Yes, we have the same programs, and we do have housing agencies that assist with foreclosure if you're facing that, and definitely reach out like for the short sales. I work with a few short sales as well, just like Nicole. So it is much better to do a short sale than to go into foreclosure. So first thing is, I would say always reach out for help first. Don't wait till the last minute, because sometimes you wait too late. It's not much that we can do. And by all means, always open your mail when they send it to you. Don't bury your head in the sand.
Like if I don't see or answer my phone, I don't have to deal with it. Don't do that. And a lot of people don't realize the banks would love to foreclose on their home, especially if they've been in it forever, because
they know they have equity.
A lot of equity. Yep. They're making money off of your hard work. And for those who don't know what equity is, somebody want to tell them what equity is. It's like a piggy bank. Equity? No. Equity, y'all don't know about what
equity is money that you have. The difference between what you owe and what your house is worth that you can gain, I guess is the best way to say it, or have access to or tap into. So it's extra money that's waiting, kind of like a 401k, I guess you could say, if you think about it that way. It's the way I look at it. That's not the definition by all means. But
that's the way when I was also going to say that's the way when Erica mentioned for a cash out refi. So the person is refinancing their house because they have some equity and they want to pull some of that cash out to, let's say, remodel their bathroom or their kitchen or something. So that's what that is basically.
Is your money?
It's yours. Reinvest it. Do whatever you want with it. Start a business.
Mm-hmm.
But contact your real estate agent first before you start.
Basically, if you sold your house today and you only owe $20,000 on it and you sold it for $200,000, you get to put the rest of that money in your pocket. Don't let the bank take your money. Don't let your house go back, you guys, and refinance if you need some money. A lot of people don't realize that they're struggling and they live in this house that somebody gave them. That is a piggy bank, you guys. You may owe money on that house, but it's still yours. That is your house. And many people don't realize that they own this house. Okay, cool. You're paying a mortgage, but this is your house and you've earned every piece of that equity that's in that property. That is your money. Don't go broke. Don't go hungry as long as you own a house. Refinance, do whatever you need to do to put that money back in your pocket or to lower your payments. You can do that as well. There's so many things that you can do whenever you own a house.
Right. Don't be ashamed either. Like I find that people, start feeling ashamed of their financial position. And I'm sure, you guys may be real estate professionals, but you guys see so much, learn so much through the variety of people that you serve. So reach out to your real estate agent and say, hey, you know what? I'm thinking about this. I'm having some financial difficulties. They may have some suggestions for you because you guys reach people from all walks of life, been through so much. You guys could be a good resource. Don't sleep on the real estate agent now.
And that's what I was going to say, because a lot of what I know about the foreclosures, the short sales and things like that is because I've had to experience it myself. So I don't just come from what I learned through the books, but what I've actually experienced. Yeah. So, and the thing about this market is a lot of people don't understand. I really don't understand a lot of the foreclosures is because why not go ahead and sell your house? If you're going to face foreclosure anyway, go ahead and sell it. And a lot of people that have reached out to me to do short sales lately, we've been able to put their house on the market, them sell their house the traditional way, and they're walking away with money.
And it's not on your credit.
And it's
And
not
you
on
can
You have
repivot.
money to start over.
That's it.
Repivot yourself.
That's it.
2022.
Y'all, man, I'm telling you, some people may not even realize they have another house inside that house. You sell that house, you can go buy another house cash. Then you don't even have to worry about no bills. Yes, y'all don't realize that. That is your money. Don't lose it and don't walk away from it, you guys. Y'all
Absolutely.
really, really need to understand that. It's tough out here, and this is an issue that's throughout our community. And when I say our community, I'm not saying black, white, whatever. Poor people, we don't realize how much money we have in our house, and so many people we just don't know. And this is why we have the Home Buyers Clubhouse, because so many people don't know what type of an investment a house is. You are just sitting on top of money, you guys. It's an investment. So, all right, y'all, we went way over today, but look, we be kind of going into Home Buyers Clubhouse mode. We preaching, but this is where it comes from.
But
I'm
it's good
telling you.
information that's needed.
Yeah,
It is.
when we start talking about like stuff like that, with people who's behind on their mortgage or who don't know how to buy a house or don't know how important an investment is, this is why we created the Clubhouse, man. We're not here just to sit here every week just to talk about how to buy a house and all of that. We are here to pour into you guys and to teach the community about so much stuff. I just can't get my words right. All right, we about to go, y'all. It's Friday. We're looking forward to the snow. Y'all tune in on Wednesday. We're going to be here. We might be snowed in. I'm going to speak it. We're going to be here, you guys. We'll see you on Wednesday. Thank you for tuning in. Be safe this weekend. For those of you guys who don't know me, my name is Jessie Lynn. I am a Triangle Realtor with A to Z Realty. You can reach me at 919-818-9854. Nicole.
I am Nicole Crawford with Keller Williams Realty. I service the Greensboro Triad area. I can be reached on my cell 336-457-3007.
Samantha. Y'all hear that? Y'all, hold on. Y'all hear that? All right, Samantha.
I'm Samantha Harding. I am your trusted loan officer. At this time, you can reach me at 919-374-0260.
Takia.
I am Takia Ward with Keller Williams, servicing the Maryland, D.C. area, and I can be reached at 240-513-7996.
And you guys can reach us in the clubhouse at www.thehomebuyersclubhouse.com. We'll see you guys on Wednesday. YouTube, we'll see you on Wednesday. Facebook, we'll see you on Wednesday. Everybody else, we'll see you on Wednesday. Have a good day. Have a safe weekend. We'll talk to you guys later. Bye.